Happy Friday, traders. It is 7:24 a.m. Chicago time on Friday, the 10th of November 2017. We're starting early today. I've got tons to do and needed to get this done early or not at all. Figured I'd get it out there. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. My quote board is red this morning. Just across the board, I'm seeing the dollar down. I'm seeing the bonds lagging down 28 ticks. The euro stocks are the second most hit commodity, down 0.36. The S&P down 8 points, 0.31. The only thing that's up is the euro, up only 3 pips, and the RBOB gasoline contract up 31 ticks at plus 0.16%. Overall, the market has sold off overnight after a very heavy, relatively heavy trading day yesterday across the board, and some unexpected. We did talk yesterday about the expectation that there would be some big movement yesterday. We covered 20 and a half points in the S&P minis. Um, and about 20, a little over 20 points in the Russell, and overall, on a relative basis, the Russell's covering a lot more ground than the S&P is, and in my opinion, more opportunity and of course more risk. But with that being said, it's really today is about re-examining re-examining what we accomplished yesterday and then most likely taking on a bid and continuing higher unless something's changed. I'll show you some charts that I'll show you on my charts how things look a little different today. But ahead of us at 10 o'clock, we get University of Michigan confidence, the prelim. This is a key number for November, expecting 100.9, and then that clears it up for the day as far as economic releases. As far as the the plan from yesterday, neither one of my scenarios worked out as planned. Again, it's tough to expect that the market will have the kind of movement that it did. We did have a lot of consolidation, some pretty good volume over the last few sessions while the market was balanced, and it seems like that volume has fed into pushing the market way lower than I expected. I didn't really see the S&P below 7250. The 7250 area potentially just pushed through by a couple points, 2570 maybe. But what it did is it pushed all the way down. Here's what actually happened. Pushed all the way down to 63 and a quarter, almost 9 points or more than 9 points below that in one big move, and then it ground itself back up to finish on neutral. So yesterday overall, we finished on a kind of a neutral extreme. Here is what this is the normal width of my bars, and I do this to gauge how much movement happened on a two-tick Renko. And as I've shown you in the prior broadcasts, it is so boring that I can fit the entire session in about half to a little over to two-thirds of the screen, sometimes even less than half of the screen. Yesterday, we're way off to the left. In order to get the whole day in, we have to squish it quite a bit. What does that say? Not very scientific, but it does give us an idea that the market was really moving around. Remember, we only get a bar once we cover the two-tick range on the Renko. So yesterday neutral, so we broke higher. It looked to me yesterday like hypo scenario number 2 was in charge, and we would likely test up to 2587. We saw resistance. Remember, I said the first test of 2580 or so is likely to yield an initial trade short for at least 3 to 4 points. There it is. It happened very, very quickly. 2580 80.50, 25.80 a quarter, rotates down, comes back up, looks like it's likely to break through, and then boom, it drops, and you have 5 points or so, 5.5 points overall on that trade. That was one legit trade that I was looking for. Then it came back to the mid. You see here, it came back to the mid, this dark blue line that floats around, and it looked like we're likely to get the continuation lower, and I was looking for 72 for a test, and that would pretty much finish scenario one, and then later in the session, as I outlined, looking for that bounce back up towards the open. Again, here's a refresher on what it looked like, right? A push, there it is. A push into 25.80, impulse down, get into 72 and a half, and then finish higher, come back higher. And that's not what the market had in mind. It took care of that first trade real quick, and then it failed to hold the mid short for a continuation. It just popped right back up to the prior day's low, to the tick at 25.8150, consolidated, broke the IB high. This, to me, looked like we had range extension up, so it looked like we were done with scenario one to the downside, and we are likely to push into the low volume node up here at 87, consolidate, and potentially push to 2590, as I talked about in scenario two. And it just did not do that. It poked, and it had what looked like a failed auction, very strong rotation down, 7.75 points. That's more than two standard deviations in size. Pull back to mid again. Here we go. That dark blue line is the mid. The teal line is VWAP for the day session only, and then it starts to break lower. And then once we get down into the 63, that's when we get uh, the drop, push, pull, higher, low, consolidate, unable, and then it breaks through this high on a price action long, and then it shoves itself right back into the range. And where does it go? It goes all the way back to neutral. This run here is a very clear sign. Notice the tapers, as the taper's not as clean as we'd like to see. Generally, tapers look parabolic this way. This is a clear sign that buyers have been found, and a price needed to auction up to find the counterparty, the sellers in this process. So that's how things looked like. I can't spend too much time today, so I'll go over not RTY. Yes, there we go. We reopen. We reopen. Push to 85.75. We pushed through basically where we ended up on the high yesterday. And then yesterday's point of control is right in the middle of the range, and then we drop again 14 points from the high, and we are consolidating. So we're looking a lot like we did yesterday around the open. There's a drop, and we're consolidating. There's still an hour. This may be a failed attempt at the low. The low looks weak to me. The point of control is below. And so what I do with this overnight session is I see that we have an LVN and a double distribution. There's a double distribution here. Remember, double distributions are great because they show us very clearly where the auction starts and ends. For each section through the LVN, there's a double distribution, LVN at 79, and that's the price to watch. So 79.80 again in play on the open today, and I would expect that a test of 80, 79.80 is likely to be rejected on the first try. I expect the market, because it's opening in range in value of yesterday, I'm expecting the market to bounce around a lot this morning before it starts to commit to one side or another, unless something comes out before the open. A fair amount of news yesterday. The drop was on. Um, sorry, I'm fighting something here. The the drop on news flow that was coming out of the Joint Tax Committee and also various speakers and politicians, powerful people who are stepping up to speak against this tax cut and criticize it. So it looked like it wasn't going to pass. It looked like some of the provisions that are important for corporations were threatened. And later on, it came out that actually we're not exceeding the debt ceiling, and therefore this is something that the Tea Party can stand behind. So it's just there's a lot going on in politics right now that's whipping us around. Of course, a cut in the corporate tax rate is directly going to impact the companies underlying the indices across the board, and it underlies also the cash flow or the financial flow of the country as a whole. And so there's a lot going on with that. This morning, we're opening against the prior point of control. Assuming we open here, I'm expecting that the market is likely to trade both ways. I'm looking for a test lower early into the 7250 consolidation, and I'm looking for an impulse up at some point, push to 80, give us about 2 to 3 points to play with, and then we're likely to continue higher and then close somewhere near yesterday's high. That is the first scenario today. That's what I'm fishing for today. You gotta be quick in a market that's volatile. And remember, our overnight volume is pretty decent again. Um, Overnight volume is sitting at, where is my overnight volume? 253,000. 253,000 is about twice what we would expect for the session. We expect that to turn into another session that has some rotations and some movement that we can hopefully do something with. Okay? Um, and then the second scenario is if we do fail and continue to play with what happened overnight. I'm looking for an attempt at 2580 that gets rejected, and then I'm looking for a pullback that fails to hold the last low, the impulse low, and then off to the races we go to 7250. We're likely to push near yesterday's lows before we find buyers into the close. We're heading into the weekend. Um, and some are observing Veterans Day today. And so it's hard to tell. It might be yesterday because it was a wider than normal ranging day. It might be very quiet today, in combination with the holiday that is celebrated, that's observed by some and not others, but also having a wide range day into a Friday. This could give us a day that has one or two moves early and then quiet for the rest of the session. So it's not a good day. How do you turn that information into trading information? It's just not a good day to push your positions. If we were on Tuesday and we had the scenario, if we were on Wednesday we had the scenario, and so on, there's plenty of room for the market to allocate in and out of risk. But today it's likely to make its moves and step right out. If you notice yesterday, here's the average volume per 15-minute bar over the last 20 sessions. Here is the actual. This look at how outstanding this volume is yesterday. Very good participation. I'm biased here, but we really need some selling days to see this kind of participation and turnover in the market so we can do something, and also repair our P&L when things go wrong, hopefully for discipline. So this is what I look forward to. I look forward to the market actually moving towards a two-way auction rather than a buy the dip, buy the dip, buy the dip kind of trade. I know I sound like I'm complaining, but the market, to me, has a lot of room still to the upside. There's just a lot going on in the major equity products that gives them room to the upside. Um, but it's complacent. The market's become very complacent, just buy and hold type of stuff. Anyway, I'll leave you with that. I've got to run. I've got a whole bunch of things to take care of. I wish you a fantastic Friday. It is like Friday. Please hit the like button as you head out. please find the like button and hit it. It does help me, and I'd appreciate it. That's a very little free thing that you can do to help the broadcast along. Take care.